So we got 10 seconds before the report. We don't need the clock because we'll see what happens when it releases. There it is, reaction to the report coming out. All right, we got like 25 seconds, a possible short. That would be at 78, a one-tick adjustment below the spikes. That would be targeting 60. It's a nice sized trade if it does get short. It hasn't canceled yet, and it looks like 78 is going to be the short, and it is to start, but we may get something else. The 78 now is the short unless it cancels. The stop would be at 97, and the targets, of course, at 60 and 53, and it's still valid. And there's a new short now, and it's the same 78, but a smaller set of targets, now going to 66, and the stop is less. The stop would be at 91. So a tighter trade. I hate it when that happens, but that is the trade. I like the bigger trades, but so far that's the trade.
Order
did get
filled.
short, and money management is at, well, it just hit
Order
money management.
filled.
So lock in. There it is,
Order
hitting target
filled.
1 or target 2 and target 3. And unless you're trailing, that trade's over. If you are trailing, you have to do it manually. Heads up, the trail would be at 76. 76. It got as high as 73. You could put your stop now, if you really want to get tight, at 71 or 72, or you would have stopped out. If you leave it at 76, you're still in the trade. That works around the 200. But if you're at target 2 and target 3, you're done. That's what I did. It's usually what I do. I'd love to trail, but there's just not enough trades that, go the distance these days. The market has so much backfilling that I just find it do better going to the fixed targets. That may change. I mean, I don't know. If your stop's still at 76, you're still short. You may have a chance to push lower. It's got to finish testing that 200 moving average. If that holds at resistance, we could get another leg down, much like we saw with the YM, right? There's a reaction into the lines right there. But we don't know when that reaction ends, and it did go through 76. So that trade's over, and we're one and done. And that's the kind of session we love. So there you go. Crude oil, bing, bang, boom, one trade, pretty straightforward. If you would have stayed with the larger trade and not gone to the smaller trade, you would have done nicely at target 2. But sticking to the rules, we always go with the newest setup. Since the other one had not yet triggered in, the new one happens. It just gives us, a way to do it the same way every time so that we can get measurable results and eliminate subjectivity and what have you. So the rule is always go with the newest setup if the prior one hasn't triggered in yet. The new one cancels the old. It's a smaller trade. Either way, they're both successful. So there you go.